Hello, everybody, and welcome to the Like a Tortoise channel. Happy Wednesday. Today has been a day full of action. Two of the companies in the portfolio reported, and so I will do my best both today and tomorrow to walk you through the key highlights, especially for those of you Alibaba and Constellation Software shareholders. I think these videos will go a long way in providing a lot of value. So if you like them, please make sure you smash the like button. The button, come on, man, I can't even pronounce these names properly. Make sure you smash the like button so we can continue to spread the words. And without further ado, let's jump right into Alibaba's earnings. I had to pick a company. Let's start with Alibaba, which is, as you all know, and if you don't know, then, well, I mean, there's always a first time, but Alibaba remains my largest portfolio allocation. So let's tell you everything that you need to know in the released earnings today. I'm recording this on May the 13th, and you can see right now, I'm recording this actually at half past 2 UK time, which means that the US markets just opened 3 minutes ago. And now let's go back here to my investing watch list right here, and you can see that Alibaba is currently unchanged. In fact, at one point it was down 4% on the back of earnings. Then I noticed that it was down 1%, and now it seems that we are, paring back all of those losses. Let's see where we're going to end up the day. I honestly don't care because the thesis is still intact, everybody. So I couldn't care less where the stock will be at the end of today's trading day. What I care about is to keep you all informed and tell you what my decision will be. And I continue to be very bullish on this company. And so let's tell you everything you need to know. That said, this report is certainly not for those. So, and I keep telling you this, guys, investing is both an art and a science. But let's just say that, I can't imagine a quality investor in this company. And but what they forget is that I was buying, and this is where what separates me from a core quality investor is that I have things that are definitely characteristics of value investing, but then I also like to buy quality. That said, I didn't buy Alibaba because they boosted the best fundamentals out there. I buy them because the story was fabulous relative to the price that I was paying. And that continues to be the case, even though I've already doubled my money on this company. As you know, very transparently, I didn't take any profits off the table, and neither have my clients, at least not that I'm aware of, unless they are lying to me. But I still think the upside is spectacular, and our cost basis is so low that we are just riding out the wave. We are tortoises, and that is what's going to continue to create a lot of value for our portfolios going forward. But all right, so let me pull up right here the PDF that I prepared for you, tortoises, and let's tell you everything you need to know. Alibaba Q1 2026 earnings breakdown. All right, so they reported mixed Q1 earnings. This was nothing that I read was unexpected. The only thing that was unexpected, and I think I say this on a positive way, is the growth that they are witnessing both across the quick commerce space and across the cloud space. I was expecting growth to accelerate, but what we are seeing, guys, this is incredible. But let me just walk you through it, and let's just start from the very beginning. So they reported mixed Q1 2026 earnings, and the market's reaction was initially negative. As I mentioned, the market was down the stock was down 4%. After the earnings release. At first glance, the concerns are understandable because earnings have plummeted, as I will show you. Free cash flow turned negative, so there was actually an outflow of free cash flows, and I don't recall seeing this, certainly not on a quarterly basis with Alibaba, because I don't think it never really happened. Margins compressed sharply. So why is the market up at the time of this reporting? Right now, that seems to be the case. And the key factors is now that they are digesting the report and what management said, because what these algorithms do is they see whether they beat expectations or miss expectations, and then that triggers the algorithm to either sell or buy. I mean, seriously? Yeah, because they are just they are just making very short-term trading decisions. The algos at these banks like Goldman Sachs, and they just try to capitalize on those sudden moves. But then what happens is, as people start reading the report properly and start and listen to the conference call, then this is where you can see whether the result was by and large positive or negative. So, but when we dig deeper, the real story becomes much more nuanced. In my view, this quarter was less about short-term profitability and more about Alibaba aggressively positioning itself to become one of the dominant AI infrastructure and cloud players in China. Everything that I've been telling you over the last few quarters has remained the same. The only thing that changed was the acceleration in revenue growth that we are seeing across some of the business segments. But they continue to plow a lot of money into these businesses in order to remain competitive, not just to remain competitive, but they want to gain market share and be at the forefront of innovation. And they provide everything, which is incredible. They are a full stack company, and that's part of the reason why I love them, because I bought it at such a deep discount relative to what I believe the real value is. But look at the headlines, key financials. So revenue was only up 3% year over year. However, I want to make this thing clear: revenue excluding divested businesses. And by that, I'm referring to the So Art, right? So Art, and what's the other one? Let me go right here to the annual report. In fact, to the quarterly report that they released. We will talk about this as well. I made a few highlights, but if you exclude the Sun Art and In Time, right, then revenue was actually up 11% year over year. So let's crack on. These were the airlines. Adjusted earnings per share missed expectations significantly. Adjusted EBITDA declined 84% year over year. And you can see that operating cash flows fell 66%. So right off the bat, this is nasty, right? Free cash flow turned deeply negative due to heavy AI investments. At first glance, these numbers look pretty ugly. I think ugly is potentially an understatement, and that's exactly why the stock sold off after earnings. Why earnings collapsed? The key point investors need to understand is this: Alibaba's profitability is being intentionally sacrificed to fund massive long-term investments. Management brought this up several times during the conference call. They say, so where is the money going? They were asked by analysts, and of course they are very transparent about it. Artificial intelligence infrastructure. They see tremendous demand. I repeat, tremendous demand. And so they are spending aggressively on AI chips, data centers, cloud infrastructure, Qwen large language models, AI applications, and agents. The company previously announced plans to invest roughly $53 billion across 3 years into AI infrastructure. Quick commerce and food delivery. Alibaba is also investing heavily into fast delivery logistics, customer acquisition, user experience, merchant incentives. This segment remains fiercely competitive in China. However, quick commerce revenue grew at a staggering 57% year over year, and they mentioned that order economics are improving substantially. So this was one of the things that surprised me the most. Very, very rapid acceleration here, and it goes to show that those investments are definitely accelerating revenues, and you want to see that. And what they say is that in the future, that will translate into profitability. The most important part of the quarter, cloud and AI. This was the real highlight. Cloud revenue accelerated again. Baba Cloud revenue was up 38% year over year, faster than previous quarters. I want to repeat this: faster than previous quarters. AI-related revenue achieved triple-digit growth for the 11th consecutive quarter. I think I may have I think it's not just 11th consecutive quarter, it's 12th consecutive quarter, but I have to see if this is accurate. This is incredibly important because Baba is no longer just an e-commerce business. It's rapidly becoming an a cloud plus AI infrastructure company. Baba's AI ambitions are massive. Management made several very bullish comments. According to CEO Eddie Wu, cloud growth should continue accelerating beyond current levels. AI-related products are expected to become the primary growth engine of the cloud business within roughly 1 year. Guys, do you understand the impact that this can actually have? And this is incredible. This is a major statement. Let me repeat that. AI-related products are expected to become the primary growth engine of the cloud business within roughly 1 year. Incredible. Major statement, the business is pivoting from traditional cloud storage and computing toward AI models, AI compute, agentic services, enterprise AI applications. When AI is becoming central to this ecosystem. Examples of that, take a look at all the integrations that they mentioned in the quarterly report, which I will discuss with you briefly, but take a look at this. They are implementing a lot of these AI innovations across their businesses. Look some examples. And the reason is because they want to enhance both merchant and customer experience, make them spend more across the platforms and lock in their trusts. So Quent Shopping Assistant was integrated into Taobao, AI-powered merchant tools, AI-driven product discovery, workflow automation for merchants, AI applications for small, medium enterprises in cross-border commerce. This is important because Baba is not building AI in isolation. It's deeply embedded into commerce, cloud, logistics. Everything is, there are synergies here. They are integrating it and creating unlocking a lot of efficiencies. China e-commerce still mixed because remember, this is their cash cow. They generate over 50% of their revenues from that e-commerce space still, and that's what contributes most profitability as well. Well, I mean, yeah, profits by and large. So Baba's core commerce business continues facing challenges. There is weak Chinese consumer environment. So a lot of these headwinds are being felt upon by other competitors as well. There are price wars, even though they are winding down on the back of some government policies, sluggish consumption, competitive intensity. Adjusted EBITDA in China commerce fell 40% year over year. However, take a look at this. Overall, China commerce revenue still grew 6%. Customer management revenue grew on a like-for-like basis. And then 88 VIP memberships surpassed 62 million. The core platform remains very powerful. But of course, when you make comparisons to the same quarter last year, then of course you will see a significant difference because they have since accelerated the investments at a rapid pace. The key debate around Alibaba right now is this. The market is asking, at least this is what I think. Don't quote me on that, but this, well, actually, you can quote me on that. Just don't take it for granted because this is just my understanding. But what everybody is asking is, will these AI investments actually generate acceptable returns? But the same question can be asked for other hyperscalers, namely the Microsofts, the Googles, the Amazons of the world. So that is the central question. The problem is, what are you paying for that? I think it's a fair question because right now free cash flow is under pressure, earnings are collapsing, capital expenditures are soaring, and management appears fully commitment and I trust them because they see the demand in the space. Look what they say during the conference call. We've been resolute in making those investments because we see opportunity with AI. In fact, they don't just say opportunity. I forgot to mention a very important word before opportunity. They mentioned massive opportunity. I repeat, massive opportunity with AI. Why I remain constructive? To own Alibaba today, you need to believe a few things, and this is why this investment is definitely not for everyone. What exactly do you need to believe? Cloud plus AI demand in China will continue exploding, and I do believe that is the case. And if you believe that is the case, which company is poised to benefit from that? The number one cloud and AI service provider in China, Alibaba. So far, the evidence supports this. Alibaba has a real competitive position in AI. I want to repeat something. No one comes close to matching Alibaba in terms of cloud and AI products in China. As simple as that. And I believe it does. Why? Massive ecosystem, huge data sets, existing enterprise relationships, strong cloud platform, proprietary AI models. When just try to disrupt that, good luck. Short-term earnings pressure is temporary in my view. The market can punish Alibaba for low profitability, negative free cash flow. However, I do believe these investments will strengthen its moat over the next decade. And I don't think in quarters. I don't think in 2 or 3 years. I think in decades, everybody. And I won't sell unless I see a major change to the investment thesis. This reminds me a lot of Amazon. This quarter actually reminded me of early Amazon periods, heavy investment, weak profitability, market skepticism, and management was prioritizing long-term infrastructure dominance over short-term earnings. Now, that doesn't guarantee success. There is always an element of risk, but investors focusing purely on EPS. So if you sell the stock because it didn't meet EPS expectations, I really think you are missing the big picture here, and just buy the index. So yeah, these are the main highlights. And now let's jump right here into the report, because I just highlighted some of the key insights, and I want you guys to be aware of all of this. And so let's crack on. Okay, so Alibaba, this is what the CEO said. This quarter, we achieved accelerated breakthroughs across models, cloud infrastructure, and applications. Cloud Intelligence Group's external revenue growth accelerated to 40%, with AI-related products accounting for 30% of this revenue, as we see massive potential. Look at this. Massive potential for agentic AI. We launched multiple enterprise AI agents for office and coding use cases, and we fully integrated e-commerce capabilities into the consumer-facing Qwen app, deepening synergies between AI and our consumer ecosystem. One thing that I tell you is that the CEO has a lot of developing experience, right? Having been a developer himself. And so this guy definitely knows what he's talking about. And he's saying that AI-related product revenue achieving triple-digit growth for the 11th consecutive quarter. China e-commerce customer management group, the unit economics and average order value of quick commerce steadily improved. So let's talk about that. Revenue, as you can see, 11% year over year on a revenue. So if you exclude revenue from the disposed businesses that I was discussing, then you can see a substantial hit to profitability. So we already discussed that, right? Anything that I want to discuss? So the earnings per share was also affected, and so was the net cash provided by operating activities, which plummeted, as they can see right here. The plummeting was mainly attributed to the investment in quick commerce, user acquisition of Qwen app, and increase in our cloud infrastructure expenditure. Okay, so let's scroll down. Let's talk about consumption business, Alibaba China e-commerce group. This is what they have to say. So if you remember that I walked you through a short while ago that they were creating more value for both consumers and merchants, and that is what you can find right here. Look what they say. We are prioritizing the integration of AI capabilities with our e-commerce applications to enhance the experiences for both consumers and merchants. On the consumer side, we integrated Taobao and Tmall e-commerce service into the Qwen app, thereby expanding Qwen's user reach and adding a brand new AI-driven experience for our Taobao and Tmall customers. Additionally, the Taobao app launched the Qwen Shopping Assistant, an AI agent providing end-to-end assistance across the entire shopping journey, including idea generation. For merchants, we rolled out Wukong, our AI native enterprise agent that integrates advanced agentic capabilities into workflow to bring efficiency to merchant operations. And then they also say on the merchant side, to help merchants grow their business and increase willingness to spend. This is it. Look, increase willingness to spend on our platform. Here is the stickiness. We upgraded our business development program for select merchants during the quarter, and reached the level of platform subsidies for these merchants is directly tied to their marketing spend on our platform. Okay, so yeah, this is important. A few other highlights right here. Our quick commerce, increasing focus on high volume, the quick commerce further improved unit economics, increased average order quarter, primarily driven by order mix optimization. And then you can see the international segment. And they narrowed losses significantly year over year, approaching break even. This is a big deal, a segment that has been unprofitable for such a long time, and this was driven by a combination of logistics optimization and operating efficiency. The unit economics of AliExpress Choice business continue to improve substantially on a sequential basis, and then you can see the AI plus cloud infrastructure 38% increase. Notably, the year-over-year growth of revenue from external customers accelerated to 40%. This momentum was primarily driven by cloud revenue growth, including the increasing adoption of AI-related products. So, show strong momentum delivering this that we already discussed. So, more stuff. You can have access, go to the Alibaba Investor Relations, and you can have access to the quarterly report where I'm reading this. And then you can see this is the summary financial highlights. We already discussed that revenue only grew 3% year over year. Remember that if we strip out the the selling of Sun Art in Intimi, then this will be 11%. So that is very, very important. And then you can see, you can read the notes right here why adjusted EBITDA collapsed. So you just need to come here. But we already discussed that this is the year-over-year decreases were primarily attributable to the investment in technology businesses, quick commerce, and user experiences, partly offset by some operating efficiencies in other parts. This is the segment results. So yeah, they break down the business segments. You can see the standout is right here, the quick commerce. If you ask me, 57% year over year growth. That is staggering. And you can read more up, and then you can see the adjusted EBITDA by segment and look at all these losses. All right, because they are investing a lot first and thinking about profitability later. They think long term. They don't mind sacrificing profitability, even if for just a few, like a year or two, because they know exactly what will happen. Number one, what will happen if they don't do these investments, and number two, what will happen to profitability over time is that they will be able to accelerate profit. They can think about profits down the line, not now. Okay. But look at this massive loss right here. These are from all others. And I highlighted that right here. Where is this? All others. Primarily, those losses are primarily due to the increased investments in technology. Anyway, they are investing a lot. Let's just leave it at that. And then you can see in terms of cost and expenses, you can see that product development expenses increased from 6.3% to 7.8%. But in sales and marketing expenses jumped from 15.3% to 21.9%. But there is a very understandable explanation for this increase. Again, you have to read the report. Let me do that on your behalf. Sales and marketing expenses, that jump was primarily attributable to the investment in quick commerce businesses and user acquisition of Qwen app. Look what they say right here about share-based compensation. Because if you come here, you can see that the total share-based compensation decreased. Look at that. Decreased from this much to 448 right here, as you can see. So, I mean, what caused this? No, excuse me. What am I doing? Yeah, so it declined from right here, 3435 to 392. So what exactly caused this decline? I like to see that decline, needless to say, but they share it right here. Share-based compensation expense decreased in the quarter compared to the same quarter of 25. The decrease was primarily due to the decrease in number of awards granted, as we have increased the proportion of long-term cash incentives granted after considering the macroeconomic environment and the general trends in the talent market. I love that. So just give them cash as opposed to stock. That is something that I like to see quite a lot. And you can read more information on the company if you come then to the report. So everybody, that's it. And here we go, ladies and gentlemen. At the time of recording, Baba is up 6.20%. Recovering from those 5% losses pre-market. It's exactly what I told you, everybody. Once people start reading into the report and start making sense of the numbers, then they will see there are more nuances in a lot of the things that they mention is very, very bullish, if you ask me. But the standouts are definitely the quick commerce acceleration and also the cloud segments. And off to the races, 5.80% so far. This is fantastic. And another thing that will bode very well for the company is just a side note here. Trump is meeting Xi Jinping, I think, today. Let's see what comes out of that meeting. Hopefully, they will engage in productive in constructive discussions, and that will bode very well for a company like Alibaba. Everybody, this is it. Tomorrow, I will launch a video on Constellation Software because they reported as well, and the results were fantastic. If you ask me, I haven't looked at the market action because I mean I was fully focused on Alibaba. I don't feel any FOMO. I don't feel like watching the price the price movements or like every time. So tomorrow I will have enough time to delve deeper into the report in the conference call and to tell you everything you need to know about it. And voila, ladies and gentlemen, let's see how high we can go or low. It can still reverse course, but what a fantastic move this is. Thank you guys. Stay tuned for more. Smash the like button if you like this.